Hello, welcome. This is SeeWing Yee from the Yee Real Estate Network. Thank you for attending. And today's topic is this multi-unit, huge real estate marketplace is poised to explode. Again, thank you for watching. So without further ado, let me share my screen, what I mean by that, and you will be very surprised. Actually, before I will share my screen, you agree that uh, in California, okay, I just gave it away. In California, do you know it's very, very hard to cash flow, right? Because the numbers does not make sense. What does that mean? That means you have to have the right capitalization rate. You have to have the right rent to value ratio. That's why now I'm going to talk about the multi-unit space, 2 to 4 units, right? A duplex, triplex, and a fourplex. That's the max I would go, and I will tell you why later on in this presentation. But if one, let's say you live in California, you don't have to physically, right? But you could be anywhere. If you want to buy an investment property in the state of California, I would highly not recommend that, right? Because you cannot cash flow. So what I mean by cash flow, so the benchmark is if you were to put 25% down payment, the question you have to ask yourself is with a 25% down payment to buy an investment property, let's say a single family home, okay, the rent, the monthly gross rent has to exceed your monthly debt service, meaning your mortgage payment on a 25% down payment monthly, your property taxes, your insurance, your property management fee, any factor in 5% vacancy and factor in 5% or more maintenance on a month-to-month or year-to-year basis. And at the end of the month, you should still have positive net cash flow. All right. So it's clear that buying a single family home anywhere in California for that matter, especially in the San Francisco Bay Area where I live for the past 30 something years, or in Southern California, single family home, I mean, you look at the extreme price point in San Jose, a median price of a single family home is around 1.8 million, right? That's ridiculous. You can't buy a single family home rental because the rent is not gonna exceed $4,000 monthly. If you put 25% down, you're not gonna cash flow. So forget it, right? Same thing, Southern California. Let's take it. San Diego with a median price of whatever 800,000 single family home. You're not gonna buy a rental property there. The rent is not going to cover your debt service. That's the key to buying successfully in real estate. So over the years in my real estate investment club, the Year Real Estate Network, that's why we take most of our California investors to go out of state to buy very good cash flow properties for many years. I've been doing for 20 years almost, and I have helped thousands of people. But let's not go there. I mean, you could always enter my website and sign in for my free weekly newsletters, and you'll learn more about real estate investing, cash flow properties, what have you. But I'm going to focus on multi-unit. I'm going to show you giving your capital resources you available, you qualify to get a loan, whatever. You can buy anywhere from 2 to 4 unit in anywhere in California, as even in the heart of San Francisco Bay Area where I live physically, and Southern California, Orange County or LA or even San Diego County. So I'm going to share with you a benchmark of a property that you should evaluate, right? Let me share my screen. And here we are. Now, this is just a sample, all right? So let me share with you the check mark, if you will, all the checklists of the ideal way. By the way, the reason why I'm mentioning 2 to 4 units because 2 to 4 units, you can still get financing under the favorable Fannie Mae lending guidelines. What does that mean? That means you get the best type of loan product because it is, Fannie Mae guidelines. Most people, the best loan products out there. You know what I'm talking about, especially your experienced investors. So I know the interest rate right now is the mortgage interest rate is hovering right now. It's August 2022 is hovering anywhere from 5 to 6% for primary home buyers. For investors, you have to pay a little bit higher rate. So and again, we all know what's going on with the real estate market and the challenges and what have you. But for investor, you have to pay a higher rate than a primary home buyer. So if the rate today is 5%, for example, as an investor, to get the favorable Fannie Mae lending guidelines, you can qualify for maybe 5.5 to 6%, 30-year fixed rate amortized mortgage, and that's the best you can do. Let me tell you one more thing. If you're gonna buy multi-units, there are more than 4 units. There are 5 units or above. You cannot go through the Fannie Mae lending favorable guidelines. You have to go through commercial investing, which is you're gonna get a higher interest rate, probably with a higher down payment, probably 30% down payment, depending on what lender you go to. And it's not gonna be a 30-year fix, right? It's gonna be some sort of adjustable rate or amortized over whatever years, 20, 30 years. Anyway, I'm not gonna go over the 5 unit. 2 to 4 is the best situation. So I'm going to show you how you can qualify. You can get a cash flow whereby the cap rate and the rent value ratio all make sense, assuming you have the 25% down payment, assuming you qualify, right? Of course, I'm not a lender. I'm not a loan agent, consult with your loan agent. But look, to buy a $2 million 4 unit, as an example I'm showing you, you do not need $500,000 of a W-2 income or whatever documented income to qualify. All you have to qualify is to if a 4 unit is breaking down into each unit. If each unit in this example, this is a good benchmark example right here. This is a Pasadena property at 4 units at $440K per unit at 3.73% cap rate. Now, I want you to keep this in mind. 3.73 cap rate, I wouldn't necessarily buy any kind of multi-unit property with this low cap rate because the cash flow, the return, the yield is not high enough. My benchmark, just so you know, write this down, is around 5%. 5%, anywhere from 5 to 6% capitalization rate for multi-unit, especially for 2 to 4 unit, is very, very ideal. So I'm going to show you how this low cap rate can be converted into a higher cap rate. But this is just an example. There are many other properties located in Northern Bay Area, California, similar to this kind of property, all right? And LA and Orange County even, which is higher price, but higher rent, of course, and even San Diego, all right? So this is a good situation because let me tell you what's going on, right? I mean, normally, you wouldn't want to buy a property this expensive. By the way, not many people can qualify even with 25% down payment to buy something like this property, 1.7. So again, my ideal benchmark to buy a 2 to 4 units under the current economic conditions is anywhere from 1.5 to 2.5 million fourplex. Okay. If you want to buy a triplex, it's fine. Maybe it could be maybe 1.5 million. If we want to buy a duplex, will probably be $1 million. So ideally, per unit price point, right, from 2 to 4 unit is around 400 to 500K, right? That's what I call a sweet spot, all right? So let's go through it. The other criteria that you need to understand is in a good location, all right? Like a B or C plus asset class locations, right? In this case, Pasadena is a very good location, right? Close to everything. Now, a lot of the multi-units historically in California is very, very old. As we know, there's a lack of land and very, very hard to build new construction. Very, very hard, especially multi-unit, 2 to 4 unit or 6 to 8 unit new construction. Very, very difficult. The cost of construction, as you know, in California is very, very prohibitive. So there's a lot of old houses. There's a lot of not only there are a lot of old single-family homes, there's a lot of old multi-units all over California, but it does not mean that you shouldn't buy. So now what you want, your criteria would be, if you're going to buy something like this, is to you want to a property that have an easy maintenance, something that has been rehab, if not recently, yeah, recently rehab and very almost turnkey, right? Very, and then hopefully there's no rent control, right? Some areas there's a little bit of rent control here in Pasadena, but other areas of LA and Orange County, if you can find a 2 to 4 units that have no rent control, you are in a win-win situation. One thing before I want to forget, a lot of these multi-units over time has been held by landlord that have been, owning this kind of multi-unit for many years, 30, 40, 50 years, whatever, right? And you know what's so weird about it? They do more often than not, they feel so comfortable because their tenants stay for so long, they fail to raise the rent. So whenever you find a multi-unit, 2 to 4 units, or even higher, in a marketplace, in California marketplace, you're gonna realize that many of those landlords, like they could be age 60, age 70, age 80, and they want to sell their multi-units right now for whatever reason. They're retiring or they're getting old, they're disabled, they want to sell the property, which they held over the past 30, 40 years. They have failed to raise the rent to the market rent. So when you have identified this type of multi-unit, that and you will and based on your due diligence and research, if you determine that the old landlord have failed to raise the rent, you have the ability to buy these multi-units. Hopefully, if the existing tenant, you want to raise your rent market rent, that could be 10, 20% above the rent that the tenants have been paying for years, right? So now, ideally, when you buy these multi-units in California, you would want the units to be vacant. You want the unit to be vacant, so you could you can after you close escrow buy these new units, new building, then you can set the market rent, right? And the market rent. Let me use this one example, right? One more thing. The 4 units, ideally, each unit have their the tenant pay all the utilities and everything else, because if each unit have their own utilities and electricity and everything else, and with bills are paid by the tenant. Some multi units you have to be very careful. The landlord had to pay water, garbage, or even some utility situation. You don't want that, if at all possible, right? All right, let me see what else. Yep, all upgraded, everything else, that would be ideal. Everything has been updated because some of these properties are like 50, 60 years old. In this case, this property is built in 1960, but has been renovated last year, 2021. So these are very ideal. Most of the units in this, multi-units in California are old, as you know, they're old. The best you can do is, 1 bedroom, 1 bath, 2 bedroom, 1 bath, those kind of things. Now, this is a very ideal situation. 850 square foot per unit. Currently, it rents at 2,200, right? Assuming this rent is low, because, like I said, the landlord have not raised their rent for a long time. So you can make the argument that this 2,200, you can do a 10% increase, maybe even 15% increase for when you moving forward, right? If it is, the new rate could be anywhere from 2,500 to 3,000 per unit for someone to rent 850 square footage on a very desirable area in Pasadena, or in good areas in California, in Southern California, whatever. So he can rent for $3,000. This is the best case scenario per unit. Let's do the math. 3,000 multiplied by 4 units, we're talking 12,000, right? So 12,000 monthly gross rent on 4 unit on a purchase price of 1.76. Your cap rate will increase from 3.73 to probably 5%, 5.5%. Don't quote me. I don't have the calculator in front of me. All right. When you get a cap rate from 5 to 5.5% on a multi-unit, 2 to 4 units, or even higher in California, this is very ideal. Okay. All right. So to recap, many people still are not aware because of the changing dynamic, what's going on in the real estate market, uh, skyrocketing prices, right? And higher interest rate, and people thinking, high inflation and potential for recession, whatever. Uh, this is the most historical rental market in history, in my estimation. What I mean is there are more people renting right now than ever before because many people are priced out of the home ownership, especially in the pricey Southern California or Northern California Bay Area markets, right? I'm sure you agree with me on that. So consequently, so that created a tremendous niche market for 2 to 4 units in Southern California and Northern California for the reasons I just stated. All right. So you may not get this mainstream information. This is a high-end sort of a niche, buying multi-units in pricey areas in California. But still, many of you have deep pockets. Now is the opportunity with the rising rents, rising cap rates, and because buyers these days, you have more negotiation power, right? Because I know it's still going to be a seller's market and what have you, but the rental market is so strong. As a buyer, you can negotiate a little bit, not that much. By the way, housing prices is not going to come down, maybe just a little bit in certain areas in the country, but because of the lack of a low inventory, still very, very historical low inventory as we speak, and pretty moderate demand. I say moderate demand, of course, because of the sudden rise of interest rates. So a lot of people priced out of the home buying market in California, and they are more than willing to pay $3,000 to $4,000 to rent somebody's house. So when you buy a multi-unit, 2 to 4 units with favorable residential 25% down payment Fannie Mae lending guideline, if you qualify, if you have the down payment, if you have the cash reserve, if you have the debt income ratio, you have to make a decent income. It doesn't have to be 500K. You could be $200,000 salary around there, maybe 250K max, depends. If you buy a $2 million for 4 units. Oh, by the way, as I mentioned before, the lender, don't quote me, I'm not a lender qualify you based on one of the units. If you buy a $2 million 4 unit, you're not qualifying to buy to get to qualify to pay the mortgage on the all 4 unit, because the lender knows that the 3 other units, the rent gonna offset the 3 other unit. So the 1 unit price point is sort of that's where your qualification matters, right? Does that make sense? For example, if you buy these 4 units or triplex or duplex, if you live in one of the units, you're only qualifying for the price point for one of the units, right? That's how the lender will do the loan qualification. So the misconception that you to buy $2 million fourplex, you need a 500K of W2 salary. That's not true. All right. Okay. All right. That's all I have to say. This video is longer than I care to admit. But by the way, I'm a California licensed real estate broker for the past several decades now. Although multi-unit is not my forte, single-family home out-of-state investing is my forte. But so anyway, but I can still assist you in any way, shape, or form. You can subscribe to my channel, click the like button, and better yet, come into my website, the yeerealestaternetwork.com, on the description below you, and sign up for our free real estate newsletter, and we can go from there. All right, thank you so much. This is SeeWing Yee. Thank you for attending. I will see you later. Bye-bye.